I'm Catherine Ross, and I'm here live from the floor of the NYSE with Jim Cramer. Jim, this is obviously a historic plunge. What's on your top of mind this morning?
Well, I think that this is a moment for leadership. It's a moment where we need fiscal stimulus to the point where we're not concerned. I don't care if it costs $100 billion. This is a moment where we need to be able to get the best minds in the world together and be able to solve this. I don't think that should be left to just the drug companies. It's a moment where we need tremendous leadership to be able to show that whether it be we have enough kits or whether we have enough hospital beds. If we don't, then let's build them. I know that I would feel more confident if we had those things. Otherwise, we have to wait till lower levels. I don't regard, for instance, buying Walmart down 44 cents as a really great opportunity. I want all stocks to be down. Stocks should be put on sale. I mentioned Walmart only because, well, are you kidding me? I don't think that those should go down. I also don't think that anyone should reach for yield with any company that has a balance sheet issue. Therefore, a Chevron down 15 is not an opportunity, as much as I think that Chevron's a well-run company. I know that after speaking with David Faber, he believes that the oil crisis is front and center. I think the public health crisis is front and center, and we'll be able to deal with the oil companies. There's a handful of oil companies that lose money at these levels. Surprising number that don't. Can oil stay lower longer? Absolutely, and that would change things. But I need to see leadership. In the absence of leadership, I just presume there's going to be a recession. I think that we could, obviously, when we're about to go into recession last, if we fell substantially to the level of, you should be looking at December of 2018. And if that's the case, we'll do a retest to that. And that's what you have to be prepared for. So if you're looking for a retest, it's going to be a retest of the 2018 lows. And there, I would be doing some buying. There are some opportunities already, but I just don't feel like you want to commit a lot of capital. We own AbbVie for Action Alerts. You buy that right here.
We hit a circuit breaker within the first 10 minutes of trading when we opened. Now, I got to the floor right as we opened trading again, but you were here the entire time. What was that like on the floor?
Well, the floor is not what it used to be. As much as I like everybody down here, a lot of the trading halts were meant to be so people can catch their breath, but machines don't need to catch their breath, and I found the trading halt to be a little counterproductive. We're looking for price discovery. We're looking for opportunity. If you slow it down, all you do is delay the opportunity. Now, that's okay if you're trying to delay a virus so that we have enough money and time to be able to handle a rolling COVID. But it does not help to be able to make it so that we're just kind of, okay, let's slow it down, because we don't want it slowed down. We want it to get to where it has to go. And that was one of the themes that I always had at the trading desk: get to where it has to go. And we're not there yet. I know a lot of people are commenting on my tone, saying that, Jim, you're just kind of low-key, and it is time to have ice water in your veins. There's no need to panic, but you would like to see some a definitive time of confidence. I would like, for instance, what would create confidence? The notion that we have enough kits that everybody on a cruise ship is tested. I think that we're all kind of at sea, that we have to listen to the most important doctor in our government say, don't take a cruise ship. Well, we don't want to not have to take a cruise. We want the cruise ships shut down. Now, maybe you could say, well, what does that do to Carnival's balance sheet, to Royal Caribbean's balance sheet? What does it do to Norwegian Cruise Line's balance sheet? And I say, no. What does it do to the average American's balance sheet? Are they part of the, if they are an easily solved part of the problem, meaning that they obviously, and you can check the CDC for this, obviously have a history of problems like this, well, let's just stop them. I don't think that's invasive. This is a bit of a war against an illness. To be sure it doesn't hit what the Harvard School of Public Health leading authority said is going to be 60% hit. So it's time to show leadership, and then that will make it so that we feel like we should buy some Coca-Cola at 52, and that's just the stock. But if we have leadership and we have low interest loans, then I think what we can do is have a government that ties things over until we feel better.
Let's take your leadership here. If we do hit another circuit breaker, which would happen if the S&P 500 falls 13%, what should investors do then?
Well, then what you want to do is you're on a hunt for accidental high yielders, meaning companies that have boosted their dividend, everything since 2009, and you don't worry about the cash flow. I am not concerned about Procter & Gamble's cash flow. However, this is one, Catherine, Procter & Gamble is up 30 straight points, okay? So why should I pick this level? One of the things that I've learned is you need benchmarks. You maybe want to start at 3.5, and then, I saw PepsiCo this morning. It yields 3. I cannot tell people at 3 you should buy some. That doesn't give me enough protection. 4 does. So I think that what we want to do is be on the hunt for good yield, be on the hunt for companies that don't have a lot of cyclical exposure, and those are opportunities. Now, let me give you an example of something that happened this morning. J&J was down 9. It was trading at 132. Now it's down 4. Does that mean that J&J is bottom? No, it means that if it could trade down 9, it could trade down 9 again. So I just think, this is the first bad day. First really bad day. Remember, we were up last week. So I think it's important to slow it down. Let's just slow it down. And slow down your buys, slow down your sells, of which there are some sells, particularly the oil patch. Take a breath, but not a breather, because a breather, again, makes no sense. We can look at prices. We got to get to where we have to go. When we get to where we have to go, there's going to be some great opportunities. It's just that we need to see look at this. We need to see leadership. We need to see confidence, okay? We need to see fiscal stimulus, and we need to see testing. Not just, the doctors have the ability, and Quest this and Quest that, and BioReference Lab. That's not good enough. What we need is an actual leadership. Dr. Gottlieb, for instance, put in charge of the testing. And no one's on a cruise ship who isn't tested. Because for all we know, there are many cruise ships out there. How many? I don't have a list. See, the government should right now say, okay, listen, Carnival, how many do you have? Norwegian, how many do you have? Royal, how many do you have? How many are headed this way? We will helicopter kits, the way we can do that, everywhere. And then at the same time, we need to have more hospital beds. So let's set that up. Maybe at Army bases, I don't know. But these are not difficult things if you think that we're in a crisis. If you don't think we're in a crisis, then we're going to get a crisis. I look at the stock prices and I see not opportunity, but opportunity to lighten up as we go up ahead of numbers being cut. So let's take one that we don't know, Nike. If Nike continues to go higher, what an opportunity to get out of Nike. We have almost no discretionary in our portfolio. I'm very proud of our portfolio. It is a portfolio built for this. Obviously, I've been incredibly negative since I came back from the Super Bowl. I don't like to be incredibly negative, but I like to be right. And it's important to be clinical about this and look for opportunities. Let me give you an example. It's not an opportunity, but I want it to be. I like Verizon very much. Verizon's been on my buy list, thinking about Verizon over and over again. But, it's only down less than $1. That's not in keeping with the Dow being down 1,300. So I wait. The edge is on those who wait. There is absolutely no urgency to buy. You don't want to take people out of their positions before we see the margin calls. If you do want to buy, let's wait. I think that tomorrow won't be any more of a better day unless we see those things that I talked about, which is the confidence, fiscal stimulus, and the kits, the healthcare. But, Catherine, this is what? We were going over my 6th crash, and I think that all crashes are different. It's a little bit like Tolstoy at the beginning of Anna Karenina. They're different in their own way. This is a crash based on confidence and on oil. And oil being something that weakens the banks, confidence being something that weakens small, medium-sized business. So it's a twofold issue, and we have to be ready to handle both.
So this is your 6th crash, but this is my first. As a millennial investor, as a younger investor, what's your advice for the millennials? Should they sell or should they?
No, younger investors got their whole life ahead of them. I mean, one of the problems is that I don't like, by the way, those automatic programs to tell you you're retired. I mean, geez, anybody for fees. The thirst for fees versus just having a regular investment advisor is something that I will regret not being more effective in stopping. But the industry is a powerful industry in terms of taking fees and also being self-righteous. And I'm coming from the industry, I've seen the self-righteousness and glad that I didn't participate in it. What a younger person should do is try to find right now the youthful companies, or the companies that I think Amazon traded down to 1,300 when the president was attacking it. I would stage my buys Amazon. Why? Because a stay-at-home economy, which is what we have, produces value in Amazon. I would pick some of my the greater healthcare companies that are working on some terrific things and do some buying of those. Here I'm thinking about AbbVie, where you get a yield at the same time. Bristol Myers. I think Bristol Myers is terrific. I would love to wade through and pick which of the interesting biotech companies I would be there, interesting young tech companies. Now, I'll give you an example of what a young person can buy that an older person can't. Trade Desk. Now, we're going to have a decline in the amount of advertising. Why? Because there's companies that won't be able to afford it. So that's going to drive Trade Desk down. What an interesting opportunity. I like that. A PayPal. Maybe that finally comes down enough that we can take a look at it. But what they don't want to do is buy, they should not be reaching for yield. A younger person, that's not your goal. You want to compound. If you want to buy some higher yield, you can buy a Merck, sure. But what the goal is to be able to buy the moonshots. And some of them are familiar, like an Alphabet and Amazon, and some of them are things that you just feel very good about yourself. I mean, because they're things that you believe in or used. I mean, so let me give you a great example. Younger people have been using Adobe products for years. Now, Adobe is way too high versus what it used to be. And again, there's no hurry to buy Adobe, but you should be eyeing Adobe for the idea that it craters. Put your list together of things that could crater.
Now, oil obviously is in focus today, but looking forward to this week, what should investors be watching, especially younger investors?
Well, we need to see, for younger investors, it's all about price, in the sense that they can have everything's on sale for them, and they should be thinking not about senior growth and junior growth. Why not? Older people can't think of junior growth. Older people should be looking for opportunities to be able to get income. For instance, I had AEP on last week. Now, AEP is up substantially. It's double since I've had it on from the beginning. But I would buy AEP. It yields 3, you buy some, and then it yields 3.5, you buy more. It yields 4, buy more. Why AEP? Because they are a principal beneficiary of lower interest rates, and they have a very steady source of income from the fact that the ratepayers are easily able to pay AEP. So what a great opportunity. So that's what an elderly person should be looking at, because there's no way you can make money in the fixed income market.
Now, I know that this is going to seem stressful to you, but I don't think that there could have been a better, hold on. I don't think that there could have been a better week for an Action Alerts Plus members only monthly call.
Oh, yeah, we got the call this week, and obviously when you have Action Alerts, you say like, okay, I've got Home Depot down 14, but then we sold some Home Depot higher. Oh, I've got, J&J at 138. Well, we bought J&J lower. I mean, we've had some very good buys, and we got rid of almost everything discretionary, and we also got rid of. We only have two cyclicals. We've got GE, which is to me a restructuring. I would buy that, and we have Honeywell, which is the tag end of a very good position. That's the only industrials. Everything else is soft goods, or companies that we think are built for this moment. Because we've been very, very negative for a very long time, and we haven't put any cash to work yet, which turns out to be not so bad. We didn't put any cash to work. We thought that it would be bad, and it's bad, and we now have no choice but to look for opportunity. But we also had to sell some BP. Why sell some BP? Walmart's up 87 cents. Now, see, that's an example. If you own Walmart, sell it. Sell it. There are other things that are better. I mean, like we were commenting on, there was someone who was blasting us for selling some Clorox. Well, Bulls, Bears, and Pigs, we're being pig and Clorox. I mean, sold some. Obviously didn't liquidate the position. But will it finish up today? Some people are saying, will it finish up today? I think that there are many stocks that need to come down more, and when they have, they're buys. That's why I didn't want this haul, because I need to see what happens with margin calls. There are a lot of people on the wrong side of the trade, and I don't want the market to be down 7% day after day after day. Remember, what you're fighting here is oil staying lower. If oil bounces back, a lot of stocks that you're selling will be wrong because you're selling maybe the banks that are ancillary. And if we start showing some leadership against COVID, that's going to be quite different. Now, I've not been pro or anti-Trump this whole period, but I do think that you have two kinds of styles of leadership. You have a style of leadership which says, I'm going to play golf. because I want to reassure people nothing's wrong. And then there's a style that says, okay, by any means necessary. The presidents of the former camp, of which that is a camp. I'm not saying that's invalid. I am of the latter camp. I'm the latter camp because I think we have a big public health crisis. So anyway, that's where I am.
Thank you, Jim. Now, guys, we are heading over to our Action Alerts Plus Daily Rundown show where you're going to want to tune in because Jim's going to give members...
Almost $1. I mean, I like Walmart. Be in Costco, though.
Which is an Action Alerts Plus name.
You shouldn't have Walmart up $1 and Home Depot down 15. There's too much overlap there.
All right.
Remember, mortgage rates are down big. That means buy Home Depot, not Walmart. So there's some mistakes that the market's making. Some very big mistakes.
And you can tune in at actionalertsplus.com to learn what mistakes. Guys, thanks for joining us today. I'm Catherine Ross, and of course, stick with The Street for all of today.